is a very young population, right? The median age is about 19. Majority of the customers that are coming up are digitally native, right? And Kenya's led the way in financial inclusion and innovation, with M-Pesa and a whole host of other things. And that financial inclusion was, to be honest, started with Equity Bank as well. When Equity Bank was a microfinance, started off with about 50,000 customers, and now we have 14 million customers all across the pyramid. In the broader context, Kenya is a very young population, digitally native. It's very dynamic, very entrepreneurial in nature. Equity does its strategy in 10-year stints. So right now we're in year 2 of our Equity 3.0 strategy. One of the cornerstones of that strategy was digitization, and the other one was starting up a fintech. So we've already started a fintech. The first horse in the stable, so to speak, in that is an MVNO known as Equitel. An MVNO basically rides on the existing infrastructure of an existing mobile network operator. We also pioneered lending on the mobile phone. So use algorithms to assess the behavior of the customer that you have, marry that with the data that you have on the credit reference bureaus, which is still young, so it doesn't have that much data, to develop a score. So over the last, I would say 18 months, we've been able to digitize about 90% of the loans. So 90% of the loans in terms of count now happen through the mobile phone. So no human intervention, 20 seconds decision is made, approval or reject. If it's an approval, money is dispersed straight away with no human intervention. So right now, only 10% of our transactions happen at the branch and ATM. 90% of the transactions, not loans, but transactions, happen at self-service channels, whether it's agency banking, the Equitel, the mobile app, or internet banking. So those are the challenges, and that's what we're doing with it. But it's not a knee-jerk reaction. It was part of our strategy. We're just accelerating that strategy. It's using analytics, right? I mean, we've already done quite a bit on that on the credit decisioning side of it. That's more on the retail and the micro end of it. Now we're going towards using the same analytics for SMEs and to a certain level corporates as well, right? And the whole aim is to make the credit approval process seamless, faster, but as well getting very finite with your ability to predict risk. But what we're doing with processes is rethinking them completely, right? Rather than step changes or just marginal changes, we're thinking from a zero-sum base, right? Saying that, okay, if we were to redesign this completely, how would we do it? And adopt new processes where required. Now, enabled to do this, we've automated 90% of the loans and again 90% of the transactions as well. But we're reconfiguring those branches for what I would call value-added services. When SME wants to come in and advise on how to finance a particular trade transaction, etc. So moving the branches from being transaction centers to more advisory centers. Banking is no longer what you do or where you do it. It's a necessity that people have, and you enable it, right? On their device, whether it's a tablet, a mobile phone, etc. So it's continuing the journey on that and getting rid of what I would call manual traditional processes and replace them completely with self-service driven, customer initiated processes using analytics and a lot of technology behind that. If you look at the purpose, the mission and vision of Equity, it is that we exist to transform the lives and livelihoods of the people of Africa, right? And when Equity made that investment in Finacle 7, if you look at it as a percentage of core capital, it was a huge investment, right? But the reason we went to Finacle is that we wanted the scalability on that. When we started off, we were just in Kenya. Today, we're in 6 countries. We have 14 million customers. With Finacle, it's been a collaborative partnership. We moved to Finacle 10, and just recently, I believe we're the first bank in the world to move the Finacle stack on an Oracle engineered platform on that. Again, the reason for that is to get further scalability and stability in the systems as we go more digital. Now with the digital and self-service, you have to be on 24/7 with the customer. You cannot afford any downtime. And here, when it's self-directed, the customer has to be able to do whatever banking services that they want whenever they want, even if it's at 2 a.m. in the morning. So therefore we needed that stability and that scalability. Our aim is to move to 100 million customers, right? And that's across, still within Africa, but across some new markets and penetrating further into existing markets as well. So again, we need to make sure that the core is very stable, it's very scalable, and it's very secure as well. So I think that our partnership with Finacle has been pretty good on that side. Yes, there have been bumps on the road, but like with every relationship, I think the willingness on both sides to overcome that with the urgency that it deserves has been critical.